You're watching HFO-TV.
I'll give a quick update on the apartment market from our perspective. So the big question is, will 2014 be all apartments all the time? Let's do a quick review of what happened in 2013 first. Our vacancy rates continue to rank between the second and fourth lowest in the major markets of the United States, depending on which sources are cited. In a survey of over 50,000 apartment units, Multifamily Northwest Fall 2013 report showed overall Portland apartment vacancy rate fell from a high of 3.6 in 2012 to 3.1 in 2013. The close and east side, North Portland and Beaverton submarkets show the lowest vacancy rates ranging from 2.1 to 2.3. In Hillsborough, Troutdale, and Gresham areas at 4.5 and 5.9 were the highest. The fall report also showed average rents increased from $1.03 per square foot in 2012 to $1.10 per square foot in 2013. This 6.7% increase trailed only Denver and San Jose nationally in major markets. So what were the factors driving low vacancy rates and rising rental rates? A lot of it has already been touched on in John's speech. The rate of home ownership in the West is now below 60% from a high of 65% in 2006. Immigration. The United Van Line's annual study has Oregon #1 as the #1 destination for immigration again in 2013. And as we all know, Portland metro area continues to be a magnet for college-educated in the Gen Y population. And there's also been the shift from the buy-rent balance. A recent report by a national bank in conjunction with the National Association of Realtors indicates that rising prices in homes combined with rising interest rates is making it cheaper to rent than buy in some places. And also employment, which John already mentioned, as Portland and Oregon are both on their way back from employment. But in 2013, the main driver and feeling of all apartments all the time in this market was the huge increase in new construction activity. The 2013 total of over 6,000 multifamily permits would be the highest number we've seen since the late 1990s. We've been tracking all the known units and planned units under construction, and if all 15,000 plus units were built, the slide will show where they'd be located. Close-in areas have the largest amount of new projects, and the Outer West Side has the largest number of total units. In 2013, we also saw developers starting to drop first-floor retail space in order to allow for more apartments. We saw the opening of the first micro units with the Freedom Center in the Pearl District. Some of these units are under 300 square feet of living space, and there are more projects planned with even smaller square footages. We've also seen the City of Portland refine its parking requirements for new apartments, following pushback from the neighborhood groups. The question we get asked is, with all this new construction, will low vacancy rates and rising rental rates continue? We feel the new construction will have an effect on the vacancy rates, but Portland will still continue to be one of the strongest markets in the nation. People really do enjoy living here, but the question is, are there jobs and wage inflation which will allow these people to live here and pay more to live here? With strong rental growth and low vacancy, the Portland market continues to be both viewed regionally and nationally as a favorable place to invest capital. During 2013, there were 21 transactions over $10 million. A couple examples are the Cyan downtown at over $95 million, Savior Flats, 179 unit in Northwest Portland at near $61 million, the Highland Hills apartment in Vancouver, 400 units, just under $50 million. These 21 transactions accounted for roughly 14.5% of all apartment sales and 70% of the total dollar volume. In 2012, there were 19 such transactions, accounting for roughly 16% and 75% of the total dollar volume. Cap rates for these deals continue to be as low as we've ever seen. These transactions are trading at 5.25% to 6.25% cap rate ranges and 50 to 100 basis points lower for projects located in the core. In deals under $10 million, we saw an increase in buyers looking to re-enter the market again. Low interest rates were and still are a significant factor in this increase in activity. In 2012, there were 98 transactions under $10 million, and in 2013, we've had 124. This continued rise in demand has caused values to increase above those seen in the highs of 2008. And these non-institutional apartments are trading with cap rates in the 6.25% to 7.25% range, and again, even lower for core located properties. We've also, which has been interesting this year, is we've seen an increase in demand for C-class properties. Again, this is due to the large amount of capital looking for investment options. The factors that could negatively affect our market are the same ones we looked at last year. A rise in interest rates and a corresponding rise in cap rates, the lack of wage inflation, and the impact of new construction. But with the trend of home ownership becoming more expensive, renter demand will continue to be strong in 2014. We expect Portland area vacancy rates to increase slightly due to the absorption of these new units, but they will remain some of the nation's lowest. And rents will continue to increase, but probably not at the 6.7 level we saw in 2013. The number of institutional transactions will continue, we'll stay flat, but demand will stay very strong. And the number of non-institutional transactions will continue to increase, with some owners deciding to exit the market due to the recovery of values, combined with the large amounts of investment capital looking for secure and stable investments. For HFO and the Portland real estate market, it looks like 2014 will again be all apartments all the time. Thank you.
Thanks for watching HFO-TV. To learn more about HFO, call or visit our website. See new listings, apartment news, videos, and more when you download our apps at the Android and iPhone markets.